The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem.
Joining us now to discuss the crypto markets is Sylvia Jablonski. She's CEO, CIO, and co-founder of Defiance ETF. Welcome, Sylvia.
Hi, thanks so much for having me. Good morning.
Thank you for being here. Well, you wear a lot of hats at Defiance, and of course, there are a lot of currencies right now that are tanking. So tell us, what exactly is going on here? I mean, is it truly this idea that there's a general risk-off sentiment going on in the market? Is it the strong dollar? Is it the combination of strong dollar and risk-off? Being one and the same. What exactly do you think is right now scaring the markets the most? Is it?
Yeah, I think it's a good question. And with crypto in general, there are a few things that we don't know. So for years we thought that crypto would be this great inflation hedge. It would be the new gold, and that sort of didn't play out. It turned out that crypto was highly correlated with equities, particularly with high growth stocks, NASDAQ stocks, things like that, tech in general. And I think in terms of the strong dollar, remains to be seen. We see what's happening now, and there's obviously an inverse relationship, but I don't think that there's sort of enough proof that it's dollar or currency related. My sense of it is that it's just pure risk off sentiment. I think that, the Fed has essentially taken a lot of steps which are spooking the market, and they're sort of working really. And, you have major indices sort of crashing, in bear market territory. NASDAQ down over 30%, S&P broke through that 3,900 level. And look, if you can't get people to buy stocks like, Apple and Microsoft and Costco, whatever they may be, kind of large cap, healthy, cash-laden stocks, it's going to be hard to get them off the sidelines and back into crypto. So I think that crypto is just following the same trend as the market, and it's just pure risk-off appetite because of the current volatility and uncertainty.
Who's more afraid, the institutions or the retail investors?
I think it's a tough one. You've got both on the sidelines from what we keep hearing, but my sense is that it's the retail investor. There are all these stats now. If you talk to some of the larger trading platforms like the Robinhoods and the CoinDesks and things like that, the amount of trading volume and the amount of millennials that have actually just completely stepped out of the market in the past 6 to 9 months is just staggering. So it looks like the retail community is really just sitting on the sidelines and sort of afraid of the future, afraid of the looming recession and their own pricing power. So I think that they're sort of offsides. In terms of institutions, institutions have certain mandates, right? So I think if a currency falls by a certain amount, they have to sort of hedge and also wait on the sidelines before they go back in. I think if you are bullish on crypto in the long term, which I would assume a lot of us kind of watching this show and participating here are, and see the value proposition, these are actually the best times to get into it, right? But it's just kind of human behavior that you're going to sit on your hands until you miss the first part of the rally, and then you'll kind of chase it on the way up.
So I understand that Defiance ETFs launched IBIT, the Defiance Daily Short Digitizing the Economy ETF. So I wonder what kind of activity you're seeing there now. I imagine it might be popular if there are a lot of traders wanting to short the market.
Yeah, so it's really interesting. It's a new fund, and I think, as happens with new funds, a lot of people have to sort of get to know about it and see that it's there. So, since inception, past performance is not indicative of future, but, as we were saying, crypto started tanking and everything related to crypto, the crypto ecosystem, the miners, the, trading platforms like the Coinbases have been down. And so that ETF is seeing, double-digit returns since inception. So I think when people start seeing it and finding out about it, they'll either, use it to express a short-term view now when we have, kind of VIX above 30, growth assets falling, crypto assets falling, and benefit from that. They might smooth out the ride. You talked about institutions. This might be a way to do that. And look, it's another alternative to the funds that are out there that are just using futures and kind of you have the contango thing there. This is just a straight shorting of the top crypto-related assets. But I should note that, again, this is not that we are suddenly bearish on crypto, right? We think that it's a tool, and in the short term, it's getting crushed, and there is a way to make money on that. So that's the thesis behind launching that product.
Just real quick, are you shorting with options or straight up shorting?
straight up shorting blockchain, digital asset, crypto related equities. So Coinbase is in there, for example. Silvergate is in there, for example. Bitcoin, because it's listed in different ETFs, is in there. So it's the whole ecosystem. So it's a little bit different than just like the short futures funds. And I think it'll be a pretty interesting play. Some of those names are down, as 60 to 70% year to date. So it's a good, it's a really good short-term play in this bear market.
So speaking of making money, a lot of people are asking, is this a buying opportunity? But then, the other question is how much more further do we have to go? So do you think this is a buying opportunity, or do you think there's still a long way down? I mean, I know it's impossible to predict, but what's your general take?
Yeah, I think, and I've been sort of saying this for a long time, and I'm, definitely feeling the headwinds in my face every time I turn on the news on a daily basis. But the market, in my opinion, has just been oversold, and crypto has been oversold since August, really, right? You have a lot of RSI indicators telling us that the market is in oversold condition. The VIX hitting above 30, like you're finally seeing that capitulation that we were all waiting for. And I think that, again, I'm just going to lump in crypto with kind of tech, because I think it's behaving that way. So this is a buying opportunity. It's not a buying opportunity if you're looking for returns in the next 2 months. You may or may not win on that trade. Day traders, I think machines usually beat retail day traders. So, I tend to hang back on that type of thing. Yesterday was a great example, right? You started off like crypto was at 20,000 at, 4 or 5 a.m. I have little kids, so I was awake. And then by noon, it was back down to 18, right? So, I mean, that's hard to win, right? But if I have a holding period of, 12 months, 18 months out, I'm more than happy to dip in here. I mean, I have like one of those automatic, buy X amount of money every couple of weeks and just let it sit and ride. And I don't look at it. I'm going to be very happy in a couple of years, and I'm going to feel a lot of pain if I look at it on a daily basis now. So that's my thesis. Dip in, discipline, dollar cost averaging.